dear student. 11th Commerce, Subject OCM, Chapter number 8, that is Source of Finance. In last particular lecture, we have completed a very important topic of this chapter, that is Owner's Fund. So, three types of Owner's Fund is there. Number 1, that is equity share. Number 2, preference share. And number 3, that is retained earning, okay, or plugging back of profit. So, this is the things. Now next one that we have to consider over here, that we can consider or we can collect the money from the market in two ways. Number 1, that is owner's fund, and second one, that is borrowed fund. Okay, that we are taking fund from the market, that is called borrowed fund. So now another source of finance, that is borrowed fund, that today we have to start. Okay, borrowed fund, that means we are collecting money, we are collecting fund from the market, and all the people, those who are invest money, that they are our creditors. Okay, it means that in future we have to pay. So here in borrowed fund, the first topic is debenture. Normally in accountants, in account and in management also, that you listen this word, that is debenture. So what do you mean by debenture? What are the characteristics? What are the types that we have to study over here? So let us start with the meaning of debenture. So when a company requires more capital, then company issue debenture to raise borrowed capital. When a company needs more capital, so definitely that they are issue debenture from market and they are collect fund from the market. Okay. Debenture is a liability for the company. And that's why we can say that debenture holder is a creditor of our business. It means that in future we have to pay money to them. Buyers of debentures, that is, debenture holders are creditors of the company. Debenture holders are paid interest at pre-decided rate at a specified time, and at the end of pre-decided time limit, money is returned or transferred into share or three conditions. So here, first of all, whatever earning earned by management, by company, first of all they have to send the money, they have to pay the money of all the cost. Two types of cost is there. Number 1, that is fixed cost. Number 2, that is variable cost. After the deduction of cost, whatever profit is that, then we can say that earning before interest and tax. So then after, they have to, first of all, they have to pay money for interest. It means that the rate of debentures is fixed income is there, and it is deductible from the tax. So most of tax savers company, those who want to save the tax, that they are issue more debenture in a market. First preference to get interest as well as at the time of repayment. Okay, certain condition is there, that convertible debenture or non-convertible debenture, that in types we will discuss in deep. So definitely as per the condition, okay, simple we can say that as per the condition that they are changed their debenture, either in share, either in cash, either in again debenture or preference. So different types of terminology is there, different types of thoughts is there, and these all things that we have to calculate in your 12th commerce accountancy part 2 chapter number 2. Okay, that accounting entry for the debentures. Next one, that debenture holder are paid interest. Yes, and this is the important source of satisfying company's requirement for the long term and medium term finance. Okay, medium term and long term finance, because we can issue debenture for 5 years, for 10 years, 20 years also. So definitely the requirement of company, short term as well as medium term, we can satisfy the need with the help of issuing debentures. Next one, when debentures is issued, trustees are appointed for the protection of interest of debenture holders 50%. 50%. So 50% they are making the trust deed. Okay, and they are checking the interest, okay, of the company, that whatever money is there that they are received. It means that 50% is captain of that 1,000 people. Okay, so as per directors and managing directors, same thing here. All the debenture holders are there, those who are making one team. Select appropriate person and they are making one team, that's called debenture trust deed, and that one is used in a particular market, okay, for the save the interest of debenture holders. It means that whatever problem arises, that 50% is there, okay, those who are contact the company, not whole 1,000 people. Okay, it means that we can say that 50% is captain of that whole 1,000 people. So this is the meaning of debenture, debenture holder, interest, as well as debenture trust deed. Now next, characteristics. Okay, so now we have to discuss what are the characteristics of debenture. So here, number one, creditors of the company. So simple. Here we can say that debenture holders are the creditors of the company, because in future, okay, in future, company has to pay money to the debenture holders. Okay, because it is one type of liability for the company. So interest as well as the money of debenture, the company has to pay to their debenture holders. Let's see. As debenture is debt for company, debenture holders are creditors of the company. Okay, they all are creditors. They are not owner. Okay, because it's a borrowed fund. Number two, fixed rate of interest. So simple. Debentures are issued at fixed rate of interest. Same like preference. The rate of interest is same. For example, they are issuing 10% debenture. It means that the rate of interest is 10%. So debenture rate of debenture is same. So it's a fixed liability. At the end of year, fixed amount of interest that they have to pay. Let's see. Debenture holders are paid interest at pre-decided rate and time. Pre-decided rate as well as pre-decided time. Okay, for yearly or quarterly or half yearly that they are decided. Okay, and on the basis of that decisions that they are paid the money. Number three, charge on assets. It means that mostly what happened that debenture holders, instead of invest their money, debenture holders take some charges of assets. In simple word, we can say that mortgage. Okay, so against the assets, in security of assets, we can collect money from the market. So here we can say that it's charge on our mostly fixed assets. Okay, land and building, machinery, can we have to put at a mortgage, and instead of that, we have to collect money from the market. Let's see. For the protection of money of debenture holders, company creates a charge on security on its assets in favor of debenture holders. Means company can use these assets. Okay. Next, number four, necessity. It is a useful tool for satisfying the need of long-term and medium-term finance. If company is necessary to long-term as well as medium-term. Because company are issuing debenture 3 years, 5 years, 10 years, 15 years, 20 years as per their need. So definitely with the help of issuing debentures, company can satisfy the need of long term as well as medium term finance. Next number, registration at stock market. So definitely each and every company has compulsorily registered their debenture at stock market, because that online trading is possible if they are registered their debenture in the stock market. All the work is done with the help of SEBI and RBI. that is Security Exchange Board of India, as well as the Reserve Bank of India. Let's see. If debenture is listed at the stock market, then it is to be sold or purchased. Anybody can purchase the debenture with the help of online trading. Okay, so this is the important one, that it is compulsory registration at stock market. Okay, so this is the fifth one. Next, repayment. Okay, so as we discussed that repayment is fixed as well as first preference after the deduction of our cost. First preference is that to repay money. Okay, let's see. At the end of time limit, the entire amount of debenture are repaid, either one at a time or as per agreement by installment. So as per the agreement of installment or at the end of period. Okay, at the end of maturity period, that company has to repay the money of debentures along with their interest also. Okay, so this is the sixth one, and last number 7, first preference to payment. As we discussed earlier, out of earning, company has to pay two things. Number one, that is cost, and in liabilities, the first liability is debenture holders, interest of debenture holders, that they have to pay first. So this is the most important things, that is first payment. Okay, here you can see, as the debentures are debts for the company, so at the time of liquidation, along with the third party debts, the money of debenture are paid. So each and every thing that debenture holders have first right to get money as a repayment of debentures. Okay, so here 7 different types of characteristics is there. Number 1, creditors of company. Number 2, fixed rate of interest. Number 3, charge on assets. Number 4, necessity. Number 5, registration at stock market. Number 6, repayment. And number 7, that is first preference to payment. So these 7 is that we can say that characteristics of debenture. Now next topic, that is types. Okay, so various types of debenture is also there. In old syllabus there is 8 types is there: cumulative, non-cumulative, then convertible, non-convertible, redeemable, irredeemable. Okay, and like we can say that extra part in profit. Okay, that 4 different types. So total 8 part of debentures is there. Okay, but here in this particular syllabus 3 types is there. Number 1, that is secured. Number 2, that is convertible, and number 3, that is non-convertible. Okay, so what do you mean by these 3 types of debentures that we have to discuss one by one? So in simple terms we can say that secured debenture, it means that against of debenture they are charged of their assets. It means that in against of debenture, company mortgage their assets. So investment of creditors holders is secure, and that's why we can say that it's a secure debenture. Okay, let's see. Such debentures, when issued with the charge on assets of company as security against the money of debenture, are called secure debenture or mortgage debenture. Those mortgage assets can be used by the company. It means a floating charge is created on the assets. Again and again, company is investing their assets. Okay, company mortgage their assets, but company can use that particular assets. So floating charge is there. So floating charge is charge which is occurs on mortgage of that particular assets. That is called floating charge. So this is the secure one. In this particular thing, debenture holders feel security. Debenture holder feel security because it is not problem of collapse or gone of their money. Okay. Next one, number 2, convertible debenture. For example, it's a 5-year debenture. So after 5 years, it is convertible or it is converted in debenture, share, preference share or in cash. So that is called convertible debenture. Okay. So mostly company giving offer to general people up to 5 years or 10 years, you are invest your money in debenture, and after the end of 5 years, you can see the growth of company, and if you are satisfied with the growth, then you can convert your debenture into share, and you become a creditor to owner. You can owner of that particular company. Okay, let's see. The debenture which at a specific time, as per the condition, can be convertible completely or partly into the share are called convertible debenture. If company has to make provision in memorandum of association, then against such debentures, after a specific time and a specific price, share is given in pre-decided ratio. So this is again accounting entries there in your 12th. So definitely what happened, that they are giving advance that they are giving the price of share, and that debenture is convert into share or debenture or preference share, whatever options is there, partly or fully. So as per terms and condition, as per the contract, they are decided that what to do and how to do. Okay, so this is the most important part, that is convertible debenture. And now next third part, non-convertible debenture. It means that debenture is not converted into share or debenture or preference share. Okay, it's still debenture at the end of redemption. Okay, let's see. Those debentures are not converted into share, and debenture holder are refunded money after the specific time and condition. For example, it's a 5-year debenture is there. So at the end of 5 years, debenture holders get the money. So this is not convertible. It is not converted into any assets or any debentures or any asset. Okay. So this is called non-convertible debenture. Okay. So this is up to today's lecture. What we learned, that is in chapter number 8, borrowed fund, and the first topic, that is debenture. Okay. 3 things is there. Number 1, that is meaning. Okay, and in meaning, most important one is that debenture, trust, deed. Okay, that is group of debenture holders, those who are protect the interest of debenture holders. So this is the debenture trust deed is meaning. Then after characteristics, 7 characteristics is there, and then after types, 3 types is there. Okay, so this is the whole topic of first topic of borrowed fund, that is debenture. Okay.